You're listening to the audio portion of Workshop Wednesdays. Workshop Wednesdays is a free live discussion about topics affecting accountants, bookkeepers, and business owners. You can join the ABO group in Facebook to participate live Wednesdays at 10 a.m. Pacific Time. Just search for ABBO in Facebook. This podcast is brought to you by Schoolofbookkeeping.com, where you will learn, grow, and build a thriving bookkeeping practice. We have hundreds of lessons with almost every aspect of the industry. Start your free month today at Schoolofbookkeeping.com.
Welcome, Carrie, to finally
We're
live Workshop Wednesday, where today we're actually going to be talking about writing off and cleaning up your accounts receivable and your invoices. So
yeah,
talk to us about that.
so it's one of those things. The cleanup part is the part that I love. The whole reason we have to do this is not fun. So just imagine this. You start in business. You're so excited. You email your first invoice or you hand it over. I mean, in today's world, it's email. And you send that invoice and you get payment right away. Your email, and then you get a notice. You're all excited. It gets deposited. You go skipping down the street, doing cartwheels. You are in business. You keep rinse and repeat. You keep doing these things and you're getting paid. Life is good. You get busy. You might even have to hire somebody. You're getting real busy. You're getting stretched. And guess what happens? Something breaks along the way. And you go and because the money's been flowing in, you might not have had time to really look at it. You finally slow down and you look at your open invoices and shazam, there's an old one, otherwise known as stale. And the longer, and then when you start thinking about it, you think, oh, maybe they weren't real happy with something and they were the ones that complained and you just caught up. So the story goes like this. You or somebody calls to find out, oh, hey, how's everything going? And they go, you didn't get the work done in time. I didn't make my loan. I didn't get the loan I wanted. It's all your fault. And you either write the whole thing off to save face and get, repair stuff, or you might just write part of it off. But it happens. It's a hard lesson, but in QuickBooks, there's ways to handle it. And especially if you have filed those tax returns, you don't want to have to amend. So we're going to go through those scenarios.
Right. So, so typically, the situation is that, I'm not gonna get paid on this invoice, and this is now the process of how do I handle that in QuickBooks. Okay, we've decided, okay, it's not worth the trouble. I'm gonna just cut my losses, lick my wounds, and go home.
Learn something.
Hopefully not. This is not a habit.
It happens, but right.
Yeah.
So.
And this is one of the risks that you take in business when you extend credit, to your clients and terms, and those types of things.
Out for the cat.
The cats are definitely having a moment. If they come bolting in and I get some scratches, we may have to reschedule.
I don't know what's going on there in Arizona, but anyway, they're mad because you did not get that invoice paid. They didn't get any cat treats.
Right. Exactly. So now they're revolting.
Yeah.
But this is the risk that you take when you're extending credit to somebody that you maybe do not know, if they are going to pay you, and you can change your business practices to collecting the upfront retainer, just like we had another workshop about that. So
or prepaid, it's even better.
Right. Work it off.
Ultimately, this is the cost of this is what could happen.
Right. So in your business, you have recognized the revenue through the invoice, but now you need to recognize the expense so that, especially if this has happened over, from one year to the next, because a lot of times people don't do this until 6 months next year or even years later. It's like you've got some revenue on the books, you need to take care of that, because now you need to recognize the expense of, I never got paid on that, so I need to take that into consideration today. And so when you do this, when you realize, oh, okay, I'm going to write this off, now that is a recognition of expense in that period versus the original period of when it was done. So if this happens during the same tax year, typically not a problem. But now if this has happened over different times, there are some things that you want to be aware of when it comes to when you do that. Now if we're talking this one transactional basis, your preferred method is what?
My preferred method is to set up an item code and other expense I call write-off. And anything, when I'm going through my accounts receivable, anything that I've deemed is not worth chasing, I'm done. I use this account, the ins and outs, the overpayments, the underpayments, and the big hits, because ultimately it's going to be an other expense is the way I prefer to do it.
Right, because just like when we did, bad checks. This is not your normal operating expense. I mean, you don't go into business to write off the business. Because that is a net of nothing.
Right.
Especially if it's in full. Maybe you got some, partial payment, great, but ideally you would need to collect the whole thing to make your profit.
Right. So we're trying to create a way so you don't have to amend taxes and so forth. Because if it's something that happens quickly in the year, you could just void the invoice and just not even have it show up. But 6 months is when you realize there's a good chance you've already locked the books down for your year-end taxes.
Right. So why don't you go ahead and share your screen, and we'll kind of walk through your process in desktop.
Okay. So we've got our sample rock castle up, and I'm just going to make that very first, I'm going to make it a bad one, 14510. So Robert Allard, his remodel, he's very angry. He wants his
He's a
money.
real person, by the way. You know
Is
that?
he really? Well,
yeah, he used to work in Tucson.
Did he? That's funny. So he's mad about that remodel, that sunroom he got. That was terrible. He's paying nothing. So in the background, like a cooking show, I've gone ahead, but I'll show you real fast. I went ahead and set up a two-sided service item to write off. And I checked this box off because that way I can use the same item code, whether it's an in or an out. So both sides are to write off. I hit non-tax.
It's only fair that you not pay your bills. No, I'm kidding.
I'll show you what I mean. I'm only talking about receivables. But yeah, forget it. So I checked off non-tax code because this doesn't have anything to do with sales tax. I'm moving on. I can't relive the past. So I make it a service item code and two-sided so that I have the flexibility to clean up things that are in my favor. Sometimes that happens. Okay. So I'm going to go into customer and I'm going to create a credit memo for this Robert Alford. And thanks to Rock Castle, there's always these jobs. You always have to be aware of that. I'm going to use write-off. If I can spell it, if there's some kind of window. Quantity 1, I just lumped the whole total in there. I had to write it down. 14, like that. That's my credit memo. I'm going to hit, I'm not going to turn this off to print. What I want to do is use this credit to apply to my invoice. Mm-hmm. And then it found it in there. So when I hit that amount, what will happen is it's going to come off of my list. So we'll save and close, and now it's not even there. But what I wanted to also show you is my fancy way of fixing this. This is when a customer overpays by $99. See, if I get enough of these, I'm good. I'm golden, right? 14,000. Another way you can do it is you can create and this is backwards. I'm going to create an invoice to write off and watch, that'll go away. So I work my way down my list to make it nice and clean, because I also don't want to go chasing this dollar. Who cares? So
does that happen? Does that happen regularly, where they overpay and don't, and they say keep the change,
Yeah.
It's basically a tip.
It's not so much in my books, because I try to do more things, using credit cards, ACH, and so forth. But when people are paying with checks, they write the check wrong, the bank cashes it wrong, and and it can be sloppy. And I notice this more when I'm trying to clean up customers' books, and I show them my tip on how to go through and keep an eye on this. At least check it monthly. I mean, at the least at the end of the year. But I'll just go through and
and I can imagine that this would happen if you have like a big contract that has multiple sub jobs or something like that, where it's like you do all this work for Taco Bell or Chick-fil-A, different franchise stores, if you're painting their stores, and they just send you one lump check to pay for all these jobs, and then they may not have something got messed up in the AP side of that business, and they just wrote you some more than what was necessary.
And then you have you'll have all kind of weird stuff where things will get landing on the wrong job and you have to fix that. But I'll go and sometimes see books and they'll look like this, even if it's paid in full. You see how it's there? And so, and they'll say, I know it's zero, it says zero, but I need, can you clean that up? That's the kind of work on top of taking the big, painful write-off of an invoice. You can run into some of these things as well. So, you just work your way down the list until you connect the dots with these pieces, and then they go away.
Right. So, and what you're doing there is one a la carte, doing one at a time. Now, in the accountant edition of QuickBooks, whether it's Enterprise or Premier, there is a built-in tool to do multiples at any given time, which is under your accountant menu and under the client data review tools. We
can write off that dollar one. So go to client data, or right there.
Just the fourth one down there. That's write off invoices.
Okay. So
now you just have to specify, how far back, and you would just choose custom. Let's just choose today's date because this is a sample company. It's 12/15.
25.
2025, yeah.
Okay. I mean, we're time traveling. It's very hard for my brain. You're saying it's 10 o'clock there, and.
All right. So here's all of the open unpaid invoices, and you can sort by the date and by the customer.
Write this one off. It's small. It's and finance charges often.
Mm-hmm. But you can select multiples here, so you can just choose multiple invoices that you may want to write off all at once. So that's why typically we'll look back 180 days, because they're old old invoices. But this allows you to choose the write-off item, and those write-off, since you've created that item code already, the accounting will be handled for you, because it will do. So if you just click on preview and write off, and then here you can specify what date you're actually going to.
I don't want that to go last year. I hopefully have those locked down.
Mm-hmm.
Oops, I'm going the wrong.
You're going into the wrong year.
I'm time
even though that's in
today.
The future.
So I'll hit preview, but as you can see, that's the first step is to set up that item code, map it to your other expense. All right, now I'll hit preview and write off, and this shows me what's going to happen. If I hit write off, then they're poof.
So now it created those transactions for you all in one fell swoop. So now it's applied those.
Click.
Right. So that way you can do that in one at one time, as opposed to doing it one at a time. So if they're hopefully this is not a big problem for for the companies that you're working with, that you're just writing off everything.
Get them on merchant service.
But oftentimes, especially if you're doing a cleanup, that certainly can be something that you want to do as part of the cleanup process. And then another tool that you have that you talked about was applying the two credits and payments to open invoices. So if you go back to your accountant menu under client data review, you have fix unapplied customer payments and credits. Second option.
Oops.
That's AP. That's another workshop.
That is the wrong workshop. Let's try this again.
Accountant. Client data review.
There we go.
All
right.
I mean, it looks the same. I mean, you can access it both because you can see you have a customers and vendors tab.
Aha. Okay. Cool.
So now you don't have any.
No. If I fix that $99 one.
Yeah. Look at you being all thorough and everything.
I get like that.
But if you click on the vendors tab, we can at least illustrate, what this would be. Imagine, if you will, this was just accounts receivable. So over on the left side, you have, in this case, it's vendors, but you would have a list of customers, and you can just go through the, the various ones. So you can see here they have a check that was written to Cal Gas and Electric, but open bills to that. So here you can specify what check should be applied to that bill, and then that will fix the connection between the two, because you may have over double expense in this case, but also you may have payments that are sitting up unapplied to your customers, just sitting out there, and your open invoice report, as you saw, had the 99 plus and the 99 below negative. So this will again, in one fell swoop, allow you to be able to do connecting those two.
Right.
I like to call, there's a analogy coming. You have your transactions. They're living in sin. They're not married to each other. So yes, the balance is correct. They're occupying the same apartment, but you need to go to the justice of the peace, and that's what this is. And then forever connecting those two transactions so that your reporting doesn't look strange when you run your accounts, your AR aging report. So that is desktop.
Yeah, and you would actually, in this case, for the vendors, you'd have it expensed twice. So.
Right. So those are two tools that will allow you in desktop to be able to clean up those things in one in a fell swoop. Now, unfortunately, in online, you have one of those tools, but it functions differently than it does in desktop. So I'm going to share my screen.
So desktop for the win so far.
Yeah, this is a desktop win. So under accountant tools, you have write-off invoices, which I'm going to just choose the accounting period, find the invoices. So this looks very similar to what we saw with the writing off of the invoices. You can choose the various different invoices. You can sort by date or aging. So if you want to get the oldest ones here, then you can do that in multiple select multiples. That's the word I was looking for. And then write them off. Now this will only allow you to do an account. So you don't necessarily have an item that you can choose. Now I went ahead and created a bad debt expense account. You can call it whatever you want. same concept of write-off to be another expense account, and then you can apply them. But as you see, you don't have the ability to choose the date.
Ew.
So what happens here is that it will. So I just wrote off those three invoices here. So if I go back to my report here, here's my bad debt expense account. If I go in here and look at the invoice, it brings up the invoice as it was dated. In this case, it was just a month ago that I wrote it off. But what it does is it discounts the invoice, the amount that you're writing it off. Carrie does not approve.
This would mess up your tax returns.
Right, because the only date on this transaction is the date of the invoice. So if this was dated last year, that's when the bad debt expense account is going to be recognized, not the date of today when I'm actually doing that. So if this is something that happens in a prior period, and you're trying to clean that up, then unfortunately you have to do that the original method of creating the credit memo and applying the credit memo to the invoice. So that is just one thing to consider when you're doing this online. And then the other tool that we were showing about connecting the unapplied payments and credits, that is that doesn't exist in QuickBooks Online Accountant at all. So again, that would be manual either way. Now there are tools to be able to help you with that that are outside of the scope of QBOA or QuickBooks Online Accountant, and we can we'll dive a little deeper into those in future topics and lessons. But for today, we're just talking about what you can do natively inside of QuickBooks for a tool there. So that is some of the ways that you can write off invoices and clean up accounts receivable with you and your clients. And I put in the Facebook group or in the Facebook live event in the comments. There we go. That's the word I was looking for. These cats have got me all messed up. In the comments, I put the blog article that we wrote for School of Bookkeeping, and we'll put this video as well, so that you can review it later. So, Carrie, anything else that you have in this regard with best practices with cleaning up accounts receivable?
So the bottom line is best practice is to do these manually, but Desktop has some great tools I have avoided, and they work great. So I've been taught something, and QuickBooks Desktop for the win on this. But if you do that method that I walked you through, the slower, more manual method, and do that with your customers, you have the same audit trail that I designed in Desktop years before the tool even existed. So check out our blog on that and give us some feedback in the post.
All right, and we will see you next time on another Workshop Wednesday, and hopefully it'll actually be working again so that we can actually go live at 10 o'clock my time, 1 o'clock.
1 o'clock my time.
And probably by then we'll be closer when you guys fall back and we don't.
Oh, yeah, I'm too confused. Yeah. So
that's not until Halloween.
The whole Halloween, okay. So have a great week, and we'll see you next week.